everyone. A very good evening to our audience today. I'm always very excited to see that we have such a great turnout. I'm Rebecca, and I'll be your host for tonight's episode for our Ask Me Anything webinar series. So today, we are going to find out more on how to stay financially secure amid career uncertainty. So why exactly are we discussing this topic tonight? In today's fast-changing job environment and market, career uncertainty is a reality many of us face. So, whether it's industry disruptions, job transitions, or unexpected setbacks, financial stability can feel uncertain. But with the right strategies, you can build a strong financial foundation to navigate these changes with confidence. Staying financially secure during these career shifts also require a lot of careful planning, like managing your savings wisely, diversifying your income streams, and making informed financial decisions. By taking proactive steps, you can stay prepared for whatever comes next and maintain peace of mind even during these uncertain times. So let's dive in and explore practical ways to safeguard your financial well-being, no matter where your career takes you. So I'm sure everyone has some burning questions. So before we get started, may I request that you type all of your questions in the bottom Q&A button, and the speakers will come to you at the end when we have our Q&A segment. And as for the audience, we are currently live on our Zoom as well as our Facebook. So before I introduce our special guest for tonight, I must assure all of you that there will be no selling during tonight's webinar. So we are keeping it completely educational. So let's keep this session lighthearted, sit back and relax, enjoy your time here while the speakers share some of their thoughts and views. So if you're watching us, please share this with your other friends whom you think would benefit from this fireside chat as well. All right, so I'm very thrilled to introduce our three panelists for the night with different life and industry experiences and perspectives. So they are Jason Wong, our Senior Financial Services Director, Alvin Tan, our Financial Services Director, and Giselle Gan, our Wealth Manager. So each speaker will provide their unique viewpoints and experiences for tonight's topic, so let's look forward to that. Introducing our very first speaker of the night, we have Jason Wong here with us, our Senior Financial Services Director. So Jason, would you like to introduce yourself to the audience tonight?
All right, thanks, Rebecca. Good evening, everyone. Thank you so much for dialing in tonight. I'm Jason. Yes, having grown up with one foot in Singapore and the other in Malaysia, you could say that I have a fair share of currency conversions. But one thing never changed, whether it's Singapore kopi o kosong or Malaysia kopi o gao. Kopi gao, the simpler, the stronger, the better. Same goes for financial advice. So over 16 years of services with my clients, I've learned that none of the working professionals, busy working professionals, actually enjoy sitting down every weekend to go through calculating their CPF, their finances. That's why I created the 50-30-20 rules. So what is this rule about? We will share more later. But seriously, beyond managing your dollars and cents, right? I find joy helping individuals build up a lifestyle and career and their personal wellness. Because let's face it, money can't buy happiness, right? But good financial planning lets you choose your own kind of misery. Yeah, so tonight I'm going to share down-to-earth insights that will help you face career uncertainties heads on, build your golden goose early, and retire earlier than your boss.
Thank you, Jason, for the warm introduction. I like the phrase retire earlier than your boss. Yeah. So I'm sure the audience will get to know more about you, through your own personal views shared for tonight's webinar. Okay. So looking forward to that. So on to our second speaker of the night, we have here Alvin Tan, our Financial Services Director. Alvin, please say hi to everyone.
Hey, hi everyone. Firstly, I'd like to thank everyone for taking the time to dial in for this evening's webinar. I'm Alvin and I've been in industry since the day I graduated. Over the years, I've actually gone through several downturns, starting with the dot-com bust, 911, SARS, global financial crisis, European crisis, and more recently, the COVID event. Throughout these periods, I've had first-hand experience dealing with clients' job losses and various strategies to adopt to make the journey more bearable for everyone. And I hope that tonight I can share some of the experience with the audience tonight. Thank you.
Thank you, Alvin, for the warm introduction. So, also looking forward to, some of the experiences and client stories that you'll share with the audience here tonight. Okay, thank you. So, and on to our final speaker for the night, we have Giselle, our wealth manager. Giselle, would you like to say hi to everyone?
Hey, yeah, good evening, Rebecca. Thank you for actually inviting me, and hello to everyone here. I'm Giselle. Really good to see so many of you tuning in. I'm actually in this industry for over 7 years. Dedicate my time to empower individuals like you to build financial securities. So whether it's reconstructing of your insurance portfolio, strategizing for wealth accumulation, or navigating big life events, I'm actually here to help you break through all the complex concepts and create a personalized roadmap to achieve your financial goals. My experience actually helping clients through a critical illness claim had aided me in seeing the real impact of thoughtful planning. So my approach is always rooted in empathy and clarity. So ensuring that you understand every steps of your financial journey. I hope our sharing tonight will be as valuable to all of you. So thanks, Rebecca. Back to you to kick us off for the topic.
Thank you, Giselle, for the introduction. So, looking forward to learning a lot from you tonight as well. All right, so that's the introduction of all our panelists, our special guests here tonight. So before we dive into our first question of the night, let's take a moment to look at this article here from Independent titled Big Bank to Cut 4,000 Roles as AI Replaces Humans. So I'm sure many of us here are aware, of the rapid rise in AI technology and solutions. So this is one of the many key reasons why many organizations are increasingly leveraging AI and exploring ways to automate certain jobs, reducing the need for human involvement. So, with this article in mind, we'll love to hear our speakers' thoughts and insights on this. So, perhaps we could start with Giselle. You'd like to share with us your thoughts?
Yep, actually 4,000 jobs at risk, actually thanks to AI, right? Let's talk about it. No doubt AI could eliminate millions of banking jobs, but the same shift could increase profits for businesses. So the hard truth is automation isn't slowing down, and industry like banking are in the forefront. So if your job is easily duplicated, it's time for you to reevaluate your skill set. So here's my take. Well, it seems all gloomy. The opportunity are for those who are ready to evolve. So what's your perspective, Alvin?
Hi, thanks, Giselle. Well, similar to yours, love it or hate it, the world is changing in the world of AI. But this is nothing new. Job cuts happen all the time as corporations need to keep themselves lean to survive. We just need to be realistic and plan for our own future. Some of the younger clients nowadays adopt the FIRE movement, and there has been many influencers who are advocating different strategies to create passive income on top of the job one is holding. All of us just need to plan and prepare for any situations that come along. Yep. Jason, how about you?
Thanks, Alvin. This DBS situation reflects a broader trends that we are seeing across the industry, not just banking. So AI and automation are changing the employment landscape in Singapore and globally. What I find interesting is that while DBS implementing the AI movement, they are also committed in redeploying the affected staff where possible. This highlights two crucial points. First, technological change, right, is inevitable. Second, adaptability is becoming an essential career skill. So for Singaporeans, this underscore why financial security can't rely solely on a single job. Using my kopi o kosong approach, simple, strong, without sugarcoating, we need multiple pillars supporting our financial well-being. Emergency funds, diverse income streams, relevant skills, and proper protections in place.
Okay, thank you,
That's for me.
Jason. Yeah, thanks, Jason, for your insights. And thanks, speakers, for your insightful perspective on this article as well. So, with the insights that our speakers have shared with us, right, we can understand better that the rise of AI is reshaping industries and leading to job automation and workforce shifts, right? So, of course, while this change is inevitable, staying financially secure requires a lot of adaptability, upskilling, and of course, multiple income streams. So, planning ahead is definitely important, whether through savings, passive income, or even leveraging on government support. will be the key to navigating career uncertainty. Okay, so before we go into our first question of the night, let's find out a little bit about our audience today by doing a little poll. Okay, so for our poll number one here, we have the question of how financially prepared are you for a sudden job loss? So we have three options over here. The first one being very prepared. I have a solid emergency fund and backup plans. And option two, somewhat prepared. I have some savings but no clear plan. And the last one, not prepared. I would struggle financially if I lost my job. So if you're on Facebook, you can comment in the chat box for your answer. And if you're on Zoom, you can just simply click your answer. So we shall wait for about 1 to 2 minutes for the results to come in. All right. So let's see what the audience thinks tonight. Okay, so I can see here that, most of our audience actually chose that you are somewhat prepared. I have some savings but no clear plan. And many of you also chose that you are very prepared. So that's great, right? So very interesting results tonight. You know what? We will find out a lot more because we have a lot of questions that our speakers will be covering as well. So let's move on to our first question for the night. What are the key financial steps to take immediately after a job loss? So I think this one, should we get Jason to share with us first?
Sure. Firstly, stay composed and review your current financial position in detail. I would suggest a few immediate actions, such as revisit your monthly budget, separate your needs from wants clearly with the 50-30-20 methods. So 50% of incomes for needs, right? Limits wants to 30%, and 20%, remaining 20%, do it for savings and investment. Tap into emergency savings, right, to meet immediate obligations if you need to. Also review your current policies like MediShield, CareShield, and some other insurance policy to ensure your coverage remains intact, especially during a gap in employment. Okay, explore premiums, holidays, or retrenchment benefit if your existing policies have such features. You may also look up to HDB financial assistance measures if there is some issue in mortgage repayment. Next, probably I can pass it to Alvin.
Hi, thanks, Jason. Well, in my years of working with my clients, thankfully, we seldom face a case of shock termination. In fact, my clients have been pretty skilled in avoiding retrenchments until recent years, which is closer to 50 years old. And many of them they are actually able to retire comfortably after taking their package, what they call the golden handshake. But maybe I just share something simple. Number one, get your families involved. Any job loss should not be a personal journey. It should be shared with your family. Look at the finances together with them and determine which are the non-negotiable fixed expenses. Then after which you look at your emergency funds and determine how long the drawdown can last. Usually it's not as bad as what you think. So if you have done proper prior planning, you probably will realize that you can last a bit longer than what you expect. Next, if you still feel uncomfortable with your financial situation, look at your second layer of defense, which can be your midterm investments. Should you convert a sizable amount to fixed income instruments to generate passive income? That's actually one good idea to use currently. And after which you have determined your survival timeline, right? Then you can probably strategize how to get back into the workforce. You can probably take this time to bond closer with your family members, decide on your life priorities over again, and obviously catch up with friends and learn new ideas. That's all for me. Giselle?
Yep, thanks. So as Jason and Alvin has already covered most of the pointers, I would like to add on that you could take some time to update your resumes or your social media profiles, as recruiters are increasingly relying on social medias. So it's definitely going to be a very stressful period, but then panic are normal reaction when you find out that you have been laid off. So as difficult as it is, try to stay calm during this period. You may want to explore short-term income opportunities such as like freelancing or gig work to help sustain yourself in the event that you are living paycheck to paycheck. Yep. So Rebecca?
Thank you, Giselle. Thank you, speakers, for sharing. So we have certainly gained valuable insights into the key financial steps to take immediately after a job loss, right, in order to stay prepared. So moving on to our next question, how much should an emergency fund ideally cover and where should you keep it? This is also, I think, a very important question. So could we get Alvin to share with us first?
Yeah, sure. Thanks, Rebecca. For the communication with my clients, basically, I always tell them there are two types of emergency funds for my clients, and I always tell the clients to apportion part of their excess funds back to CPF OA to redeem some of the funds that's used for housing. And we do this every year end after we decide what are the excess funds. This strategy has worked very well for all my clients, and many of them even managed to build $1 million CPF balance by the time they reach 55 if nothing goes wrong. For me, I find the most illiquid and compulsory fixed expense, they are mortgage payments. And if one is able to deal with that, usually they are able to survive a job loss. The other emergency fund is the more commonly shared 3 to 6 months of living expenses. I have a unique strategy of challenging my clients to build up to 3 years of emergency funds. And basically what they do, they invest in fixed deposits, money market funds, Singapore savings bond, and as well as REITs and bonds portfolios. This will in fact enable them to build a passive income on strategy on top of standby for emergencies. Yep, that's my take. To you, Giselle.
Yeah. So actually mentioning about CPF and housing, your emergency fund should also covers utilities, groceries, and transport. So think about all the things you absolutely need to cover. As for what Alvin shared earlier on the tools to keep your money, my take is not to put all this money in anything that are volatile, like example stocks. So this is your safety net. If you want you want it to be safe and readily available. So the key is to strike a balance between safety, accessibility, and some level of growth to combat inflation. I know Jason has some great tips on this too, right? Jason?
Oh, yes, thanks. So as Alvin mentioned, right, given our high cost of living and competitive job market, 3 months might be insufficient, especially for those in a specialized field or with dependents. I would say high interest savings accounts, Singapore savings bonds, they provide more liquidity. Build up your funds, right, using the 50, 30, 20 methods, consistently channel part of the 20% to the savings portion to build up your emergency funds. Start with $1,000 and then build it consistently. You may also consider automatic transfer, right, to on your payday to build up the emergency fund. Your emergency fund is not for investment or chasing after the returns. Yeah, it's like an insurance against the life uncertainty. Accessibility and the capital preservation are more important than the returns. Thank you. Back to Rebecca.
Thank you. Thank you, Jason. Thanks, speakers, for the great insights for this question as well. So, what we can learn from the speakers for this question, right, is to aim for at least 6 months, right, of essential expenses in an emergency fund. So, focusing on accessibility and, of course, your safety. So, consistent saving through options like high interest accounts or your CPF strategies will also help to build a strong financial cushion. So, great insights from the speakers. So next up, the question that many of us will think about, especially if you have just started out your career, right? What are some easy ways to build financial resilience, even if you are just starting out in your career? So maybe I'll get Giselle to share with us first.
Yes, I would love to. So it's never too early to start building that financial cushion. Even if you are just starting out, small steps can make a big difference. Automate savings by setting aside 10 to 15% of each paycheck into separate emergency and investment accounts. If not, try to save a little bit from each paycheck, even if it's just a small amount. It can really add up over time. A great trick is actually to automate your savings. Set up a transfer from your income account to your savings every time you get paid. It's just like paying yourself first. You may also want to use budgeting apps to track spending so that you can identify some leaks like unused subscription. Also, be mindful of credit card debt or personal loans. Try to avoid unnecessary borrowing. Building good credit is also important. Like if let's say you are getting your first home, so living below your means and avoiding lifestyle inflation could also help you accumulate wealth faster. It is also wise to diversify your income early, whether through freelancing, investing, or side hustle. So what's your thought, Alvin?
Yeah, thanks, Giselle. For fresh grads, I usually start with a simple risk management strategy, basically just to cover the big risks. Saying that means having a good hospital cover and basic coverage if they ever need it. The rest are basically financial disciplines. Just set a goal and challenge yourself to hit it. Make it fun and not a chore. I have a young team, and usually we advise young clients to actually try to hit the first 100,000 to 200,000 in assets by the time they reach 30 to 35 years old. And next, we try to embrace volatility in the stock market and understand yourself when faced with a market downturn. We take a coaching concept when working with clients at this point. Basically what we try to get the clients to understand is themselves. How would they be able to accept downturns and so on and so forth, and how to react to it. This part we find that it's very useful. The earlier you learn, the better it is. Lastly, having the habit of building passive cash flow. It can be as little as $10 a month passive. But once our young clients get the idea, they will slowly build up this habit of building passive cash flow. And this will help them to retire much, much earlier. So these are the general concepts we work with our younger clients, and most importantly, we try to make it fun. Jason, to you.
Thanks, Alvin. So for the young professionals I work with, right, I encourage them to live within 50% of their income for needs, limits their wants to 30%, and save or invest the remaining 20%. Because this discipline is really powerful due to the compounding effect. And while many young Singaporeans may see CPF is as restrictive, right, it's actually a very powerful force saving tool. Yeah, consider making voluntary contributions to the annual limits and get appropriate insurance early if possible, because all these coverage, protections, disability, hospitalization coverage, it's more affordable when purchased young. Also not forgetting we have these future skills, skill futures. Yeah, we can use it strategically for skills that increase employability or income potential. Of course, not to forget build professional networks, because in Singapore, right, who knows who you knows matters tremendously, especially during your career transitions. Consider supplementary incomes like, side income streams that can create resilience and skill diversifications as well. Yep. Back to Rebecca.
Okay, thank you, speaker. So really awesome points by our panelists for this question as well. So these are some truly very valuable advice shared. Okay, so next we have our second poll for the night. Okay, so for this question, do you have alternative income sources outside of your main job? So, and again, three options over here. You have the first one, yes, I have multiple income streams. The second option, not yet, but I'm still exploring options. And the third one, no, I rely entirely on my salary. So again, if you are on Facebook, you can comment on the chat box for your answer. And if you are on our Zoom, just simply click your answer. Okay, so let's wait for about 1 to 2 minutes for the results to come in. All right. Okay, so we have here the results. I can see that, a lot of you chose that yes, you have multiple income streams. That's awesome. And then also, and a few of you, I think it's a balance lah. Also chose option 2 and option 3. So don't worry about it, because we will definitely be covering a lot more on all of these in our next couple of questions. Okay, so now on to our next question over here. So speaking of having alternative income sources, right, outside of your jobs. What are some practical side hustles and income streams that you can tap on during job uncertainty? So maybe this one I will get Jason to share with us first.
Yeah, sure. I think in Singapore context, there are a few practical options. We can leverage on platforms like Carousel, Grab, Foodpanda, delivery services, and if you have access to vehicles, you can even do GrabHitch, Grab delivery. And in Singapore, right, especially for PSLE, O levels, A levels, we can do some teaching, tutoring, as a freelance services. And if you have passion or hobbies like photography, baking, crafting, or even music lessons, right, you can monetize your hobbies. And also, we tends to work from home nowadays. I mean, some people work as virtual assistants. There are many SMEs, right? They probably couldn't afford a full time, so you can actually work as a virtual assistant for this SME. And last but not least, there are a lot of people are doing content creations, YouTube, social medias. Yeah, these are the place you can build up side income. Yeah. How about Alvin?
Yep. Well, I always challenge my clients to think of building a side income on top of their current job. And interestingly, I think due to our education system, right, I do think many of us are trained just to work for companies and get a fixed salary job. Personally, I think I know people who earn extra income by doing Grab, be it transport or by food delivery. I think that's probably the easiest quick fix in current times if you need the money. And also due to the nature of PhillipCapital, right, I do know many clients who learn to generate income through trading. In fact, the ones who mastered this area, they are actually not even working, and we do know of quite a few of our clients doing that full time. Last but not least, I just like to say that the key skill one probably need to build their probably sales skills. Without understanding sales, you'll probably find it difficult to generate any income in whatever business you try to go into. So do take some courses or seek mentors for that if you intend to go into this area. Yep, that's all for me, Giselle.
Yep. To actually add on to what Jason has listed, I do have a client who does baking at home as a side hustle and she sells it online. So I feel that she's very talented as she bakes really nice cakes and pastry. I also do see that more and more young entrepreneurs starting to run home business, F&B business, and some of them runs them during the weekends or during the holidays. So it will be good for you to think broader about your skills and interests. See if there's any way that you can turn them into an income stream. Yeah, that's all for me, Rebecca.
Thank you, speakers, for sharing these insights. So, we can learn that building a side income also starts from leveraging your skills and interests and as well as the available resources, right? And the key is to start simple and of course be consistent. Okay, so let's move on to our next questions because we still have many more to cover. Okay, so up next, what are some financial considerations you should keep in mind when starting a side hustle? So I think this one, can we get Alvin to share more with us?
Yes, Rebecca. Yes, I think the first thing you need to really consider is whether the current employer allows that. The last thing you want is to get into trouble with your company for a side hustle. As I deal mainly with high performing executives throughout my career, usually they can't even take a side hustle. I also like to highlight that any side income that you want, they are actually taxable. So remember to factor in the tax liability and also file for it. Next is capital expenditure. This is probably the amount of money that you want to set aside to invest in a business. So first you have to consider is whether is this amount a show-in venture. If not, make sure you can afford to lose the capital because there's no 100% in business. Following that point, are there better alternatives to use the capital to generate a side income? Usually I will always advise clients to talk to more people, especially those people who are involved in the business they are interested to get into. Personally, in my practice, I find that using the money to upgrade yourself will generate the best long-term rewards. But obviously, I would say this is all based on personal preference. Yep, that's all for me. I'll pass on to Giselle.
Yes, as Alvin mentioned about taxes, make sure you understand the tax rule here in Singapore. So aside from taxes, think about the legal side of things. Depending on what you're doing, you might need to register your business or get certain permits and licenses. It's worth checking with the local authorities. Insurance is another thing to consider, especially if you are providing services or selling products, and it involves a physical work or liability risk. It could also protect you from unexpected issues. It's also a good idea to keep your personal and business finances separate. Maybe open a separate bank account for your side hustle. And if you're creating something original like a logo or a product design, think about protecting your intellectual properties. So if you're working with clients, have clear contracts in place can save you a lot of headaches down the road. Perhaps Jason would like to wrap this up.
Yes, thanks, Alvin and Giselle. Both speaker actually mentioned the income being taxable. Yes, regardless of the amount, right? There are many people not aware of this. And self-employed person, right, must contribute to MediSave as well when the net trade income is more than $6,000. Yeah. Also consider professional indemnity insurance for service-based businesses. Last but not least, do not compromise on your essential savings or protections. Thank you. Back to Rebecca.
Thank you, speakers, for sharing the key financial considerations to keep in mind when starting a side hustle. So I had no idea that there were so many points to consider before starting. But yeah, so I've learned a lot from all of three of you. So we have come to our last interactive poll for the night here. So the question is for poll three will be, have you explored ways to safeguard your finances against unexpected career changes? So again, we have three options here. The first one being yes, I have a plan in place. Second option, I've thought about it, but I haven't really taken action. And the third one will be no, I haven't considered it yet. So again, if you are on Facebook, do comment in the chat box on your answer. And if you are on Zoom, simply click your answer. So let's wait for 1 or 2 minutes for the results to come in. Okay, very close percentage for all three options. But I see that a lot of you have actually chose that, yes, you have a plan in place, right? And there are also a couple who chose that, no, I haven't considered it yet. So fret not, we will cover them in the following questions as well. Right. So, after getting to know the audience on whether all of you have seek ways to safeguard your finances against all of these or any unexpected career changes, right? We're at our next question here to find out what are some financial safety nets that can help cushion the impact of job loss. So for this question, could we get Giselle to share with the audience on this?
Yeah, sure, Rebecca. So, well, an emergency fund is the most important buffer against sudden unemployment, but other tools can help too. So, beyond your emergency fund, which we already talked about, there are a few other things that can be act as a safety net. For example, to build a career transition fund for upskilling or certification. Income protection insurance can also replace lost earning if, let's say, you're unable to work due to illnesses or injury. And while it's not something we like to think about, life insurance provides securities for your loved one too. Also, depending on your situation, you might be eligible for some government assistance programs. Don't underestimate the power of your support network. Networking proactively to access unadvertised job opportunities. Maintaining strong professional network can actually help you to find new opportunities faster if you lose your job. And I put this point to the last resort, which is to having a credit line or access to low interest loan. It can provide temporary relief during financial hardship. Yep. So Jason?
Thanks, Giselle. So beyond personal emergency funds, right, there are about three formal and informal safety nets. First, government schemes, right, like ComCare, silver support schemes that provide for low-income Singaporeans. MediShield Life, CareShield Life provide essential health cost protections. For financial institution support rights, they actually offer loan relief measures during unemployment. Credit card companies may also provide hardship programs with reduced or fixed interest. You may explore mortgage refinancing to enjoy lower interest so that to lower your monthly repayment. For community resources, right? Example, CDC vouchers, that is helpful. And religious organizations may have support or programs for their members. Last but not least, professional association may also have career transition assistance or counseling. Yeah. How about Alvin? What do you think?
Thanks, Jason. Actually, there are many government schemes that's available to help different employees in different stages of life, as mentioned by my fellow colleagues. So go check them out. As for the personal front, again, I like to highlight the importance of getting your family involved. Things might not look as bad as you think, and look for your trusted financial advisor too. They're usually very well equipped to advise you on various strategies to adopt if they understand your family and financial situation. Lastly, I might sound like a broken record. See which of your assets can be converted to passive income instruments. I find that this solution is very unique in our current economic environment, so make use of that. That's all I have. Back to you, Becca.
Thank you, speakers, for sharing your points here. So I think we all now have a better understanding of what are some of the financial safety nets available to help cushion the impact of job loss, right? So now we move on to the topic of mindset shifts and financial habits, which I personally believe are very crucial for long-term financial security. So, what key mindset shifts and financial habits can actually help individuals achieve lasting financial stability? Jason, could you share more about that with us?
Sure. Let me touch on mindset shift first. It shift from job security to skill securities. Your employability, right, depends more on adaptable skills than any single employer. From scarcity mindset to abundance thinking, from creating values to an income opportunities rather than just cutting costs. From consumer to investor perspective, like you view your major purchases through the lens of appreciation and depreciations. From reactive to proactive financial planning, and from competitive to collaborative career approach. That means your network becomes your safety net. Yeah, build genuine relationships. As for financial habits, right, I find that consistent application of the 50-30-20 is crucial. Regular financial reviews with your licensed professionals, continuous education, like improve your financial literacy. You can look at articles or even webinars like this. Giselle have mentioned, right, automation. Set up automatic transfer to savings or investment on payday before the spending decisions occur. And the health investment is important because we need to prioritize physical and mental well-being. We want good healthcare. We don't want health scare. Next to Alvin.
Thanks, Jason. I would like to highlight more on the mindset shifts for this part. A few mindset shifts that I've constantly my more high-level C-suite clients always tell me. Mindset number one, no one owes you a living. Mindset number two, nothing is forever. You cannot have a boss who always likes you. Mindset number three, if you think there's politics in the environment, you are most likely losing the game, be the politician. Mindset number four, always count your blessings. If you're doing well today, take advantage of it to let yourself have a head start. Don't let it go to waste. That's all for mindset. Many people will say that have the growth mindset. So I advise people to go borrow a book on it, read it regularly. It will help in many aspects of your life. As for the financials, I think on top of the strategies that I shared previously, pick your social network, as mentioned by Jason, and also your financial advisor. They actually play a very pivotal role in your journey. That's all for me. Giselle, for you.
Thanks, Alvin. Yeah. So that makes a lot of sense. For me, what stood out is actually by having a growth mindset. So be open to learning and adapting and view setback as an opportunity to learn. One of the biggest mindset shift is to think long term and avoid focusing solely on immediate gratification. Most importantly, never rely on just one source of income, even when things seem stable. Always be looking for ways to grow financially and professionally. I think that's a good place for me now to stop and pass back to Rebecca.
Okay, thank you, Giselle. Thanks, speakers, for all of the great points over here. So I'm sure our audience has learned about a lot on what are some of the mindset shifts, right, and financial habits that we can adopt to help us individuals stay financially secure in the long run. So before we move on to our Q&A section, very exciting, we welcome you to connect with PhillipCapital or any of our financial specialists tonight. So if you'd like to know more about tonight's topic as well, or any other questions related to your financial well-being, feel free to reach out to any of our speakers here today by scanning their QR code. So I'm sure from tonight that we can see, our financial specialists here, our panelists are always very generous in sharing their value-added financial tips to their clients as well as their followers. So they are also expanding their team and welcome like-minded individuals to explore more with them. So for those who are currently enjoying the webinar like this one and would like to stay connected with us to receive more updates, do give us a like and follow us on our Facebook and Instagram page as well at Phillip Wealth Advisory. Okay, so we have reached our Q&A session, segment, I mean. So yeah, a couple of questions here. Actually, the questions keep coming. So yeah, let's pick a question to get, some of our panelists here to answer. Okay, let me see what we have here. Okay, so we have here from an anonymous attendee the question, based on your experience, is taking courses a good way of getting the next job? Or chances of success remains the same? So maybe this question I can post it to Jason.
Hi, thanks. Yeah, I think the best answer come from the next employer. However, I will still answer this. Yeah, I think taking good courses, all this actually train us to be forward thinking because we want to find out how relevant our past skills or current skills to the market and whether make ourselves more marketable, employable, and understanding the market fits, right? And throughout my sharing, I actually mentioned the words adaptability because these words actually follow me for the last 20 years. And I find that one of the things that many professionals or business owners I work with, they actually survive SARS, 911, COVID, all that, right? Actually, they are very good in adapting to the new environments and customers' needs. So I would say attending courses is good to upgrade our knowledge about the markets and also more and more understand about ourselves, our strength, and to achieve better clarity. Thank you.
Thank you, Jason. Okay, so let's pick another question from the list here. Okay, so okay, also from an anonymous attendee over here, we have the question, should retrenched people consider stopping their insurance payments and downgrade their homes to preserve money? Okay, I think quite an interesting question. Maybe I can pose this question to just.
Yep, sure. Yeah. Right. Actually, for the short answer to stopping insurance payment and also to downgrade your home, it depends on individual circumstances. Yeah, the short answer is that. But then, think about if let's say you are stopping the insurance payment, right? You must understand the purpose of it. So insurance is actually meant to protect against financial shock. So by stopping the payment, right, will leave you vulnerable to bigger financial setbacks. So it's best that you can discuss this with your financial advisor, your consultant itself. And for downgrading to your home is practical, but also a very big decision. The things that you have to consider is actually how long you expect to be unemployed, right? And like what we have shared earlier on, if let's say it's just a sudden unemployment, you can find like some gig works and stuff like that to do so that you anticipate that it's a shorter period of joblessness. Yeah. Thank you. Back to Rebecca.
Thank you, Giselle. So, Alvin, I know you have been waiting for your turn. So, I have a question here from an anonymous attendee for you. Uh, so for people who are old, example, the age range above 50 years old, how realistic is it to find another job? And should such people stop interviewing and, focus on retirement or other non-traditional jobs? For example, starting their own business, PHV, delivery, etc. So your views on this?
Okay, thanks. I'm the oldest here, I think. Okay, I'm 51. I think that's a very real question. Is it that easy to find another job? That's the question everybody's asking, right? And will you, by taking a course, be able to pivot to another industry? Personally, I find that actually is not easy, because whatever education that you take, the new courses, you can be sure that there's another whole group of people who is 30 years, 20 years younger that's taking the same course. So I think normally we do talk about that with our clients. And the whole idea is about let's move from employment to self-employment in that case. Because for most people who's above 50, they probably have a sizable amount of years in certain fields, which can be used to pivot them to another industry as consultants. So normally what my clients, they do, they become consultants after they are above 50, which means they start small and they start to build their own portfolios using their current experience to go into another field or even in the same field where companies are not willing to pay them a full set of full employment, but they are willing to actually get them on contractual basis to work. So that's one area that is most common amongst my clients if they ever lose their job. Second thing is, when you're 50 years old, I think you probably would have a much more realistic view of what your next 50 years is going to look like. So take this period to actually think about it. In fact, I think the most biggest challenge at 50 years old for amongst my peers is actually keeping healthy. We're either too fat by eating too much, or we are too fat for working too long hours in the office. So take this period to actually revamp the life with your family members. Also at 50 years old is you're very close to 55 years old. So you actually have to think about whether your housing payment is being done, being paid up or things like that, and whether should you move to another housing and so on and so forth. So to simplify it, just have somebody to talk to who's qualified to work through your finances and decide what's next. I think that's the easiest. Yeah, thank you.
Okay, thank you, Alvin. Okay, so next question. Okay, I think this one, I'd like to post it to Giselle. Um, the question, should I consider a career change if I'm struggling to find a similar role? And how do I even start thinking about that?
Yep, I'm here.
Yeah. No,
Okay,
always take your time.
so yeah, absolutely considering a career change can open up new and exciting possibility. So especially if your previous field is facing some challenges. So the first step is really to do some self-reflection. Think about what you truly enjoy doing, what skill you have gained throughout your whole career that can be transferable, and what kind of work environment you thrive in. There are also some resources available in Singapore, like career guidance workshop and online assessments that can help you to explore different career paths. So don't be afraid to step out of your comfort zone and explore new horizon.
Thank
Yeah,
you,
back to you.
Giselle. Thanks for covering the question. Okay, so we have because we have like quite a lot of questions, let's try to cover them all. Our next question is also from an anonymous attendee. Should a fresh graduate who has H&S plan and casual life plan buy critical illness or a whole life plan? So which one is more important? So maybe this one I can post it to Jason.
Yeah, sure. Thanks. Okay, this question is a financial advice, so gotta be careful. I mean, we need to understand your needs and priority first. But as a fresh grad, generally speaking, if you already have H&S, CareShield, and you are comparing between critical illness or life plan, right? So it depends on your budget, your current existing cash flow. After you review it, then you set a budget to it. And if your budget allow, you can actually look into life plan with critical illness coverage as well. So it doesn't have to be, or you can only choose one, right? Because both coverage is serve you different purposes. In the event of critical illness, the critical illness coverage get you the income replacement, right? Then the life plan is for building up your life protections over the years. So it depends on your needs, your cash flow, and your priorities.
Okay, thank you. Thanks, Jason. Okay, so we'll be taking final two questions from the list over here, from the Q&A list. So over here, from another anonymous attendee, how do I plan for my finances if I am just starting my career via business? Bracket employment might not be viable for me for my given age, and financial journey. How do I plan for my finances if I am just starting my career via business and financial journey in my 40s? As my financial timeline is much more constricted than many who may be starting out. This one, Alvin, would you like to try to answer this question?
Yes, sure. Yeah, closer to my age, right? Okay. Basically, I find that you shouldn't view it as a disadvantage versus someone who's 25 or things like that. Personally, those people who are 25, they have too many options. Those people in mid-40s, I think congratulations, your options are much narrower. So the focus is all about doing it well. You also have experiences, and also hopefully you have a good network to ask for help. So this is the first part I want to emphasize on. Number two, about finances. Finances, if you have a family, really go through with them to see whether is it viable. Personally, there are a lot of people in Singapore with single income family also. So it's perfectly fine if you start a dual, you switch to single, it's quite easily adjustable. So I can't specifically say what's the correct strategy, but I can only emphasize a bit more on the correct mindset. That actually mid-40s is really is nothing new. Our government knows what's called job skills future for above 40, right? And we have the long-term use of midlife crisis, right? They're all in the 40s, so you're not alone. Just get into the correct network and also decide what you want to do for the next 20 years of your life. I think you will turn out well. Hopefully that's useful.
Thank you, Alvin. Thank you. Okay, so one last question over here. Very interesting question here. Okay, so this one I think uh okay from an anonymous attendee as well. So the question is, I earn only around 1.5K a month, 1.2 after CPF deduction. So is there a rule like the 50-30-20 rule? This one belongs to Jason, right? That is more suited for low salaries like mine, because my necessary expenses per month are about 900 a month. So do you have any tips for this anonymous attendee, Jason?
Firstly, how old are you? Yeah. So before getting into the finances, right, maybe you want to take some steps backwards and understand all this financial literacy about and how you can do proper budgeting, you know. And all this, right, actually helps you to move forward because focusing on what you mentioned, right, take home 1,200, then after expenses, probably 900. You have a lot of expenses to take care. Let's say you have a lot of commitments, then it's very hard to apply the 50-30-20s. But it doesn't matter because some situations allows you to do defensive budgeting, yeah, which you can turn the 50 into 60s, the 20s reduce to 10, and then the 30s reduce to 20s. I mean, this sounds a bit confusing, which is why we always recommend speaks to someone you can trust, a licensed professionals to assist you, to advise you from there. From there on, you can, better propel yourself towards better financial plannings, and you have more knowledge to take on your current and near futures. Thank you.
Okay, awesome answer, Jason. Thank you so much thank you, speakers, for all of your insights and for answering all of the questions as well. Due to time constraint, we have to move on to our final tips. So, before we end off everything, we would like to get our panelists to share their final tips on staying financially secure amid career uncertainty. So, yeah, since Jason ended off, let's get Jason to start as well. Jason, would you like to
Sure.
start it off? Yeah.
Can. So remember the 50, 30, 20 we have discussed, right? Within that crucial 20%, right? The savings portion lies the seed of your golden goose. Even if you are still young, you can start, building this golden goose. Nurture it consistently, protect it diligently, and watch it grow into a reliable source of securities and options in your life. I encourage each of you to take one concrete steps tomorrow, or you want to take it now so nobody can stop you. Whether that is opening an investment account, increasing your emergency fund, or exploring a skills that could generate additional income, small consistent actions create powerful results over time. And I thank you for all your attentions, and I wish you all financial resilience and peace of mind. Thank you.
Thank you, Jason. Okay, maybe we can get Alvin next to share your final tips with the audience.
Yes. Okay, I'll just share a few tips my more successful clients have shared with me throughout all these years. Tip number one, always know how much your immediate boss is paid. No point working hard not knowing how much your next destination pays you. Point number two, your salary should include all risks, mental hardship, politics that come along your regular work. If it does, be happy working. Number three, are you working for passion or money? Be clear about that. And so to conclude, personal finances should be separated from your employment. And employment is just your fuel to create financial freedom, be it long-term or short-term joy. It's your choice to decide where to allocate them. So decide wisely. Yeah, that's all from me. Thank you for attending tonight. To Giselle.
Thank you. Yeah, thank you, Alvin. Thanks, Jason, also. Really love how you both put that. So as we conclude, I would like to share an inspiring quote from Steve Jobs. Your time is limited, so don't waste it living someone else's life. This serves as a powerful encouragement for all of us to take charge of our own path and make decisions that aligns our true selves. Financial security and career success are not just about luck, but the right habit, mindset, and preparation. So don't wait for a crisis to start planning. Take action today so that no matter what happens in your career, you remain in control of your future. The best time to start was yesterday, but the second best time is now. So that's all from me. Back to you, Rebecca.
Thank you, Giselle. Thanks, speakers, for all of your final tips here for our audience today. So, all right, we have come to the end of our Ask Me Anything webinar. I hope everyone here that has joined us today has benefited from tonight's webinar, and we'll have some ideas on how to stay financially secure amid career uncertainty. So once again, you may connect with any of our speakers here tonight if you wish to understand more about any financial related matters. So we have come to the end of tonight's session. I would like to thank our three expert speakers for their unreserved and open sharing, and also a big thank you to everyone who has stayed with us thus far. So do join us for our future Ask Me Anything episodes as well. We'll love to have you here again. So this is Rebecca signing off. See all of you and good night. Bye-bye.